Hello all, I'm Bob Pisani. Welcome to ETF Edge, your go-to place for everything exchange-traded funds. Would you buy a FOMO ETF, a fear of missing out ETF? We're going to find out today. We're going to be talking with Matt Tuttle from Tuttle Tackle Management. He's got a FOMO ETF. There he is, in registration right now. Also joining us, Sylvia Jablonski, Chief Investment Officer, Defiance ETF. Clean energy, very hot. Hydrogen, she's got a new hydrogen ETF, HDRO, just came out last week. She'll tell us about why she thinks hydrogen is the hot investment idea for 2021. And Harry Whitten, my old friend from Old Mission, also joining us with a perspective on ETF trading trends and his general observations on the business. Matt, everybody's trying to capture this crazy nature of the markets. I said it's like having a bowling alley installed in your brain, being an active stock trader these days. So you've got value stocks, you've got growth stocks, you've got the reopening trade, you've got tech stocks, you've got the Reddit play, you've got Bitcoin floating around out there. You have proposed a FOMO ETF that I think is very interesting, that might be capturing the zeitgeist. I'm not sure how it works, and that's why I want you to explain it to us. Now, we've had a momentum ETF, the MTUM, that rebalances twice a year. We've also got a buzz ETF. We had Jamie Wise on a couple weeks ago that rebalances monthly, that primarily looks at social media. Now you're proposing a FOMO ETF that can buy anything, you say, that rebalances weekly. Explain to us how this is actually going to work. How are you going to decide what to own?
So the first thing we're going to start with is the entire universe of whatever is currently hot. So, why we have that flexibility is I know what's hot today, but I don't know what's going to be hot 3 months from now next year. So right now, the portfolio would be able to choose. It would have SPACs. It would have, innovative technology. It would have momentum stocks. It would have, what's hot on social media. And that would be the universe of what we would start with. And from there, we apply quantitative models. So we're applying a trend following model where what we want to do is we want to take the stocks that have been the hottest over the intermediate term, because typically what you see happen is what's been hot continues to be hot. Objects in motion tend to stay in motion, but then we want to combine that with a counter trend following model. So with that, what we want to do is we want to take the stocks that have done the worst over the past couple of days, because typically what happens is those stocks get oversold, and then eventually you see money start to flow back into those. So we're going to have both of those models running at the same time, and those two types of models tend to smooth things out quite a bit.
And it seems like a very critical part of this is that counter trend piece. That I don't know if you call it reversion to the mean, but that's how you capture, I'm guessing, the sudden rebounds, this dizzying change in pace where all of a sudden one day growth's hot, next day value is hot, or tech's not hot, and transportation stocks are hot. By partly owning stocks that are unloved and that you're anticipating will bounce, you can capture the rebound a little more smoothly. Is that the idea?
Yeah, and that's really huge. I mean, that's a big part of it. And we've seen that in the stock market recently. I mean, people will ask me, hey, Matt, what's the NASDAQ going to do today? So it's going to be up. All right, well, why? Well, because it was down yesterday. It's really, the markets move like that a lot. So, trend following and momentum is great until it isn't. And so, yeah, that counter trend piece is vital to really be able to smooth out the returns.
And when you say you can own anything, you mean anything. Could you own Bitcoin, for example? I mean, is that a possibility?
It's not in the basket right now. We certainly have the flexibility. I need to wrap my head around how Bitcoin can't eventually one day go to zero. And if I can wrap my head around that, then Bitcoin is something that, yeah, we could be in. Certainly, we do have blockchain. Since I've been running the model in a personal account, we've had things like Riot blockchain. I think we just got out of that today. But, we can have the blockchain companies. Bitcoin, I got to get sold on first.
Okay. Harry, what I find very interesting about all this is the the effort by the ETF community to sort of capture this crazy trading market that we've had. So I think that it's noteworthy. The Momentum ETF rebalances twice a year. The Buzz ETF rebalances once a month. And now Matt's proposing an ETF that rebalances once a week. You see where this is going here. What do you think of these efforts to sort of capture the zeitgeist?
Yeah, I mean, it's an interesting idea that Matt has. But his idea is definitely new. But there's a lot of funds out there that trade weekly. There's, the active funds, as we all know, we've talked about ARK on this show many times. They can trade daily. So it's not nothing new where somebody's going to go in and rebalance. And you talk about MTUM. MTUM is scheduled to rebalance twice a year. But if signals hit, they do trade in between their semi-annual rebalances if they have to. If the quant numbers hit, they trade. So it just makes sense that ETFs are doing more and more rebalancing.
Yeah, I mean, that's a very good point about MTUM. They could have, I don't know what you call it, a special rebalance, but you're right. They're not necessarily set to twice a year. But my point, Harry, is ETFs seem to be responding to the need to respond to the trading situation faster. Is this good or bad news, Harry, for that we're chasing FOMO to begin with? We're even having this discussion rather than trying to figure out what's, standard, Vanguardian, Jack Bogle kind of things that essentially we're just talking about, how fast can we move in and out of stuff no matter what is popular. Is this a sign of the times? Certainly, but is this good news or bad news we're doing, even having this discussion?
Well, yeah, I know that's hard to say, Bob. I mean, Old Mission as a market maker, we make markets in every ETF. Somebody launches a fund, we're going to make a market in it. If people are going to buy it, that's not our decision. We don't market the products. There's always stuff that open up every day that somebody looks at it and goes, I don't believe this is launching, and the next thing you know, it has $1 billion in it. It's just people. If people want it, they'll buy it. I guess that's the easiest way to say it.
Yeah. Matt, is there a minimum market cap in this? I ask because people have already asked me, I have people email me saying, I just want to know what's the next Reddit stock. I don't really care because I'm not interested in fundamental analysis. I just want to sort of get on the zeitgeist here and, figure out. But, of course, those are possible to spot ahead of time, right? I mean, what do you say when people say, I really just want to get on the Reddit bandwagon, whatever, I don't care what stock it is.
Yeah, so I mean, no minimum market cap, but obviously being active traders, we're going to be cognizant of that. And as far as, the Reddit bandwagon, our answer to that would be, yeah, you can have some of that, but we're going to look at weighting things. For example, our weighting scheme weights things based on volatility. So, the models had GameStop in there, or not GameStop, AMC in there for a while, but it's been a 0.6% position. So if it does go to zero, you might not even notice it. And so, yeah, so we're going to be in those types of stocks, but we're not going to be, 10, 15, 20% in anything like that.
Right. Now, this is not trading yet. This is in registration. When do you think this might become active? When would it might, be able to trade?
We're hoping mid to end of May. That would be our hope.
Mid to end of May. Okay. Great. Keep us abreast of what's going on. I think it's a great idea. I'm not sure about long term about how it'll work. I'm dying to see how you'll maneuver in and out of these many different asset classes.